Good morning, good afternoon, and good evening, traders from across the globe. Thank you for tuning in. Thank you. This is my 2056th edition of Short-Term Trading Live with Oscar Carboni. In this video, we will probably talk about a little bit of long-term stuff as well. So not just short-term in this video, but maybe a bit of a long-term view as well. In fact, if you kids behave, I might actually put my projection out for the year. I've been waiting for a dip. I can't tell you how long, but if I keep waiting, by the time I put my projection out, we'll be higher than it. So I think in this video, I might just have to put it out. Traders, before we get involved, you know that this is a risky game. If you didn't know that, wake up, kids. Trading is very risky. If you do not place stops, protective stops, and place them first before you trade, if you do not know the risks behind this game, if you do not have risk capital to lose, and I mean lose because that could happen, then this is probably not for you. But for those traders out there that understand the risks, that put their stops in, that know their technical analysis, let's get moving, kids. We got a lot to talk about in this video. Tonight's video coming at you on a Monday night for trading, Tuesday, February 11th, 2020, has a green Omni arrow in E-mini S&P and NASDAQ. Now, last night's video, I pointed out that there was this double top and that the market should react to that double top. Well, the first thing that happened on Sunday night through Monday morning was the S&P cracked for almost 30 bucks, at least $25 to $27. It just cracked. And then it hit my profit objective, turned around and ran up. But we didn't end up making any money today because it cracked so quickly last night. We didn't get a chance to get short till late in the afternoon, and all we got out of it was a break-even trade. Then we sidestepped it. Maybe you lost a few bucks, maybe you made a few bucks. Then we sidestepped it, and boom, it went right back up. So there was an actual reaction to that double top regarding the possible double top after a very brief dip, which was quick but deep. NQ and ES decided to continue on, and I'm with that because we've got a green Omni for trading on Tuesday. What else is out there? Traders, once again, usually we talk about a shorter term view here, like what's in this video is for trading tonight and for tomorrow, but there is this. The longer term picture is this. As interest rates stay low and go lower, and if you look at the bond chart I'm about to show you, that's where they'll end up. These are the lowest interest rates we have ever had, ever in the history of the United States, which just fuels the stock market. And at the same time, they're the highest rates that you can get in any civilized country on the planet. So they're just going to keep coming in and buying bonds. And as they buy bonds, the rate goes lower slowly, and it fuels the stock market. So abstract overall picture, as long as bonds don't get raised, as long as rates do not get raised and bonds don't start to go down dramatically, our stock market will just continue to plod higher. Of course, there are going to be down days, maybe even down weeks along the way, but until they start raising interest rates, there's almost nothing that's going to stop long-term this rally. Now, in between this long-term rally and the end of this first quarter, there is this. From all the reading that I've done this weekend, and I read volumes of stuff over the weekends, newspapers, you name it, I study like crazy. There have been so many shutdowns across this world, especially in Asia, but across this world, so many industries that aren't moving as quickly as they were because of this coronavirus scare. It's going to have to show up in the first quarter earnings reports. It's got to show up somewhere, but for now, we'll worry about that when it gets here. Green Omni, I'm not looking for anything but buying the dips on Tuesday. That's for your E-mini S&P. As I mentioned, longer term view, rates will continue to fuel the stock market rally. What else is on our board? Nflx. Nflx bullish, and I've got a target. Let me show you. And then Crude is still ugly compared to everything else. I think the chart on Crude begs for us to continue to sell. And my Omni is red in crude oil. So I think we will sell the rallies in crude oil, especially if they set up properly. So once again, we got past the double top. There was a reaction. I'll show you on charts, but now very bullish and love that. as long as interest rates continue to go down or stay low, overall stocks will go up. Nflx bullish, crude oil ugly. Traders, right before I get into the chart segment, I've got some great charts I want to show you. I want to remind you to go to OMNIBOOTCAMP.com and fill out your OmniCamp applications because time is ticking. We got 3 weeks left. You've got to get out to Las Vegas. You've got to make your flight arrangements if you're flying. So time is ticking. Call me now, 702-629-4755. Fill out an application at OmniBootCamp.com or just come directly to livewithoscar.com and chat with me in my live trading room. The trading room is free of charge. No credit cards are required, and that is where you can always find me, and I'm usually on camera and microphone. Traders, that's what I wanted to show you. Well, that's what I wanted to tell you about before I went to show you these charts. These are the topics that'll be in the chart segment. With no further ado, let's go look at some charts. Traders, E-mini S&P. This was the chart I showed you. That bar didn't exist, and I said, could this be a double top? We're starting to have a pullback. Well, that was on Friday. Sunday, the first thing that happened was this. Whoa! And it started to go. But then by Monday afternoon, back above what could have been a double top. 3 times I see it up there, I say that's enough to negate the double top. Right? So let's get rid of that. We'll strike it out. It's not a double top. Well, now that it's not a double top, as you know, technical analysis, things morph from one thing to another. I think what we see now that we're through the double top is this. Look at it. It's clear as day. I think it has morphed into an inverted head and shoulders. Left shoulder, inverted head, which is upside down. Right shoulder, and away we should go because an inverted shoulders is a bullish indication. So I think it's morphed to an inverted head and shoulders, and I think it looks great. Then you've got NASDAQ. Look at this great bull flag on the NASDAQ. Looking for a breakout, probably right outside this channel and keep on going. So NASDAQ looks fantastic for trading on Tuesday technically. And then much like the NASDAQ, look at Nflx, bull flag, but this one's outside of the channel, which tells me you're looking for 385-ish in the next 1 to 2 days. Probably 369 tomorrow morning. You can get yourself long. And probably the day or two you'll end up there. At least that's what my Omni's showing me. Stops always go in. Don't forget to put your stops in. But somewhere around 369-ish, I think you can buy and look for a target near there in the next day or two. And then we've got this. Why Nflx, the stock market itself, why is it so easy for that market to go up? When there's disaster after disaster and bad news, the possibility our president might have been impeached last week, there's all sorts of stuff, coronavirus, and the stock market keeps going up. Why? Well, as bonds go up, interest rates go down. As bonds go up, rates go down. Interest rates going down are going to continue to fuel the stock market rally. These rates are the lowest in U.S. history, but still really high for the rest of the planet. In other words, you've got negative interest rates in Europe. You could come over here and get between 1% and 2%. You jump all over it, and that's what they do. And there's no reason why they shouldn't, and they will continue to buy bonds, which slowly pushes the rate down, and that will continue to fuel the stock market rally. Longer-term view, kids, just wanted to point out why that happens. And then we've got crude oil. Look at this channel crude has been in. And one of the things I want to point out inside this channel is, do you see a lot of green bars inside the channel? Let me blow it up for you. Same chart, zoomed in. Do you see a lot of green bars inside this channel? You get a red bar, you get another one, another one, another one, another one. So, boom, 5 in a row, you get a green bar. Another red, 2 green bars, boom, lots of red come. Then you get 1 green bar, boom, lots of red come. We got 2 green bars. What do you think's coming next? You rarely get 2 anymore, especially in this channel. We've had 2 green bars. Omni's pointing towards the downside in crude oil. I'm expecting some more downside in crude. So traders, you've seen the charts. You see that yesterday's double top did have a bit of a pullback, right? Luckily, when we were short, we got out of the market's way and we didn't get tagged on it. Now we've gone green. You can see that in the charts. They look very good. That inverted head and shoulders, if you ask me, looks real. You see that interest rate chart? There is no way that that's not going to continue to fuel the stock market rally. Nflx bullish, crude oil still ugly, and then there's this. If I wait any longer to put out my year-end targets, we might get so high it'll be ancient history instead of news. So I'm going to break down and give you my year-end targets, knowing that this coronavirus is definitely going to come see us at the end of the first quarter after reporting, and we'll go down, and you guys will say, Oscar, why don't you take that stupid thing off your board? Because it happens every year. That's why I was waiting for the dip first, so I wouldn't get any lunatics fighting with me. But it doesn't look like that dip is materializing. So, the 2020 Omni year-end targets, and I've had these targets literally for the last 3 or 4 weeks. S&P was trading around 3220, 3240, over 120 points ago at this point when I came up with these targets, but I am going to show them to you in tonight's video. If we get to 3480 in the E-mini S&P, I only think that's going to be resistance. I think we will end up getting through that, and we will get to 3674, and I actually have a secondary target of 4035. So I expect this to be hit, possibly this to be hit, and here I think if we stall, that's all that'll happen, and we'll go right through it, and towards the end of the year, we'll see these targets. 2020 Omni year-end targets have been posted, kids. Enough of you have asked me for them. E-mini S&P, 3480, resistance. Maybe it'll get there and back off a little, but I expect higher, 3674. Once you best that, you can make it as high as 4035. Let's make this the target for now. And if we get above that, we'll talk about it. So that's it, kids. I hope that helps. I don't know if we're ever going to get that dip, but that's it. Too late now. Targets have been posted. That's it. I'm out of here like Vladimir. Kids, remember, put your stops in first. Keep your emotions out of trading. Come to Live with Oscar and hang out with me in my free trading room. Don't trade alone. And make sure you fill out your OmniCamp applications before you miss your chance to have a 5-night, 4-day seminar with me live in Las Vegas. Traders, keep those emotions out of trading by saying this to yourselves every morning, every afternoon, every evening. And you know what that is.
That's all, folks.
Past performance is not indicative of future results. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.